Alrighty. So I'm gonna try to keep this under 30 minutes. I think this probably takes a little bit longer to explain. But we're gonna talk about candlesticks formation for your chart. So price is recognized through an image called a candlestick. And let me just quickly pop over here. This is price. This is your chart, and each of these individual bars here, black and green, are candlesticks. They're described as candlesticks. Price prints in these, and when it finishes printing, within the given amount of time that it's set to, will print into what is called a candlestick. Okay, so we're going to talk about it. I've talked about it briefly before. There are thousands of videos. I usually will send this copy of this PowerPoint along with this video recording or screen recording of candlesticks. I don't spend too much time discussing it because our strategy and how we trade does not focus too much on the movement of candlesticks or the way it's printed. A lot of other people who trade, when they look at candlesticks, they focus, maybe hyper focus is the term. They hyper focus on the interpretation of the candlesticks to the T. We don't focus on it that much because it doesn't make a difference in how we trade, but there are certain instances that I want to go over with candlesticks that it just adds to your arsenal. It adds to your tool belt when you're trading. When certain things are not yet confirmed, you can look at the size or the length or the placement or the color of the candlesticks to help you kind of determine or confirm or um, determine whether or not your strategy actually is being abided by, or if price is going against you and you need to get out of that trade and not stay there. I'm also going to talk in my last video, the final video for this entire series, where I'm breaking down all the different aspects that we use for trading. I'm going to talk about um, scalping, which is a type of trade that you use. And so people who are scalpers, and scalping means you enter in and out, meaning you place your money into trade and you come out with profit quickly. A scalper is a really fast trader. And the way that they benefit from it is by understanding and interpreting candlesticks appropriately. So they probably hyper focus the most on candlestick formation versus someone like us. We do intraday trading. We don't hyper focus on it as much, but I think it's important to go over because it's one of the things that you use in your tools to determine if you're going to stay in a trade or not. Okay, so this candle is a bullish candle, and I've gone over bullish versus bearish. Bullish means we are going up, bearish means we're going down. Bullish candles are typically green. You can change your colors on your trading view to whatever color you want it to be. It does not have to be green. But for most charts, especially when you log into TradingView, which is the platform that we use to trade, it's going to be green. And so this entire thing here, which is the candlestick I showed over here, and basically it's green, tells a story. It doesn't just print on its own. Each candle is priced at a certain time. Everything with the market is price and time. So this is a green candle, which means price is bullish, which means price is going up. Why do we know that price is going up? Because of this color. But more importantly, there are certain areas that we look at, and just looking at the wording that's here, it'll tell you when price begins its printing of this entire candle from top to bottom, including these, which are called wicks, and you see it says upper wick and lower wick. It'll start at the bottom, and this is where it opens. So price opens at here. And if you look to your left, you'll say price opened at, we'll just be relative and say price opened at $25. Price opened at $25. And the reason why I know it's green is because it eventually closed up here. So green candles that are bullish open at the bottom, close at the top. Open at the bottom, close at the top. That's important because bearish candles do the opposite. Both candles, though, bearish and bullish candles, or green and red candles, will have this wick at the top, wick at the bottom. The wick at the bottom signifies that while this candle opened up and went up and closed here, prior to it closing here, during the time that it was printing, it got as low as here. Same thing up here. It got as high as here, doing its printing. So price opens up here at the beginning of its time, and it just prints. Goes back and forth because price and buyers and sellers are in the market. So buyers are moving the price up because they are green, they're bullish. Sellers are moving the price down because they're bearish, and it's this tug of war. And at some point, price goes all the way down here. That's the lowest, so somewhere like 13 or something. And price gets up here, which is like, 68 or something. But ultimately, between all the back and forth, price finally closes here. It's almost like the buyers win because the price opened up down here, closed up here, buyers win. So that's the interpretation of a candle. The wicks, I always say, is like your fingerprint, or it's the fingerprint of a candle. It shows you how far the candle got. It shows you where the candle got as low as this point, the candles got as low as this point. Ultimately, it's settled in this box. That's important to know. Now, on the opposite side, a bearish candle or a seller's candle, similar to a green candle, but just in the opposite. Remember that the green candle opens at the bottom, but a red candle opens at the top. Because the price is going down. Price goes down. So since price is going down, you're going to open at the top, close at the bottom. You're going to get as low as this wick down here, as high as this wick up here, the same as the green, but the only difference is it's opening up, closing down, because that's the direction of price. And again, this is a seller's candle, so price moves back and forth. Buyers and sellers are fighting to get, who's pushing this candle, how big is this body going to be, blah, blah, blah. At the end of the day, it closes down here because it's a seller's candle. Okay, so now we start to go into like interpretation of candles. Like what I showed you initially shows a really, very full-bodied candle with a long wick here and a long wick here. That means something. Remember that I said that the buyers and sellers are fighting in the candle space. So the candle opens up down here for the green, and it closes here. We know that because it's already happened. But typically in live, when a candle is actually being formed, you have no idea if its opening here will finalize as a close up here. Because when the candle is printing, and I'll try to demonstrate this on the chart, when the candle is printing, we know it opens here, but ultimately price could move and go down, and price could close at the bottom. It doesn't have to close at the top. We're watching it in a live form where we don't know how the candle is going to end up closing. But in this demonstration, we're seeing that the candle has already closed. So we know this was a green or a bullish candle. This was a red or a bearish candle. It's also important to look at the body. The size of the body is important. If the body is big like this, it's a very good hefty sort of candle, and the wick is a good distance here and there. It's not too terrible. What we look at are the differences in how candles can look. So, and this actually is a good interpretation. Again, I can't show it to you live unless we're doing a stream. But let's say a candle opens up here, but you don't know if the candle is going to close up here or close down here. So you watch the candle print. So now it says the price dips, which means the candle goes down. So hey, this price may end up being a bearish candle. But as it's printing, it starts to go up. I'm like, okay, maybe it's going to be bullish because it's giving a good volume. It's giving a good body here versus here it's really tiny, and here it almost does not exist. So you're like, okay, great. And you notice that the wick is long at the bottom here and the wick is short up here. What usually that means is that this body may have been even longer, may have even been red and been full here. But buyers, because buyers go up, right? Buyers are bullish. Buyers are long. Buyers go up. Buyers want price to go up. Sellers go down. They're bearish. They're red. They want price to go down. So imagine if the buyers are at the bottom, pushing price up in the direction they want to go, and sellers are at the top, pushing price down in the direction they want to go. So when I see this long wick, or when you see this long wick, you can imagine that price was probably lower. right? Sellers at that time had price to be a little bit lower, but buyers came in and pushed price a little bit more up and gave it this look where this got this long wick, which lets me know price had been lower, maybe more red, but buyers came and pushed it, and now we have this little short wick on top. Then we see that price is still forming into this where maybe the sellers now, because this wick is a lot longer than this wick, but they're both long, but this is a little bit longer. Sellers were a little bit stronger and they pushed price a little bit shorter, because remember the wick here was pretty small. So just imagine if the sellers pushed this block down a little bit more and had a little more strength. They're trying to flip this red and go down. Ultimately, the candle has closed and we now have our final interpretation. Price definitely opened up here. It got as low as here, it got as high as there, and it closed at the top. This is how every single candle is interpreted. But by the time you are doing this on your own and actually trading, you won't spend that much time interpreting this because, like I said, we don't focus too much on the opening and the closings that much of price. All we're looking at ultimately is what the candles look like and, you know, which candle are we going to use to enter into our trade. So we don't focus too much on that. All right, there are different types. There are different types of candles, and each candle interpretation means something different. If you're a scalper, or if it's part of your trading strategy, you would be really focused on some of these. When you see these types of candles, you'll do certain things. Either you'll reduce your position, you'll increase your position, you'll not enter. Just depends on what your strategy is. For us, it's not really gonna matter as much, but in general, it's good to teach this because I don't know, I guess I learned it. I realize overall it does not make a difference in my trading strategy, which I guess is a good thing. But you never know what kind of strategy someone else will end up with, so it's good to just know all the details. So this is a bullish, and it's given this name. I've never heard this name before, but I've heard other full names of it. It's a full body bullish candle. This is like the best idea of a candle that you could ever wish for in life. Why is that? The reason why I say that is because of how large it is. Like, there is no wick. Like, there's no confusion. This candle opened down here, closed up here. And the interpretation, which I'll give everyone this PowerPoint, says it's total buyer control. Like, there is no confusion right here. Buyers were completely stepped in. So if you're trading and you see this candle, you're like, oh man, I'm going to buy, because there is no question that price is strong. First of all, look at the size of this candle, and the color is green, and there's no wicks, and it's not short, it's not stout, it's not giving confusion, it's not, in the middle, it's not having a long wick. It is a full body candle. Like, this gives me all confidence to enter into this trade because it's a full body. Same thing with this one. If you're planning on entering to sales or sells, or you're going to go down and you see this gives you the confidence to enter in, because you're saying price is telling you that sellers are in control completely. And here price is telling you that buyers are totally in control. So you have a whole bunch of confidence to enter into trades when you see these kind of candles. Versus when you see these types of candles, you're not as in my training or my experience, you're not as convinced to enter into trades when it's like this. You'll still enter in because, like, something like a hammer where it has a long wick, but again, I mentioned earlier, bullish, they're telling you like bullish reversal signal, like we're trying to be long. Sellers were at some point present here, but the buyers were able to push and kind of give strength in this. This is the candle where you honestly don't know what's happening. Same thing here. It's like half and half. You've got a body here. It's really small. You've got equally long wicks on either side of this, and this body is small as well, but obviously bigger than this. These are doji or spinning tops where you don't know if we're going to go bullish, we're going to go bearish. This candle, if you see this candle print and then you see a doji candle next to it, a lot of times you might expect that a red candle will present afterwards, but those are all considered trading patterns. But this is just to show you the different ways that you can notify candles. You won't always see them in this full red or full green. You'll see them a lot with more wicks at the top, at the bottom, and every single one tells its story. Here, you can tell that price opened up here, probably got as low as here, got down. Buyers pushed it up, so buyers are kind of strong here because it's not a full red, and you got this long wick at the bottom. Like, if this is a true red candle, why isn't it more red down here? Well, buyers were really strong and they pushed this candle up. So if I'm anticipating a next candle, I would not be surprised if the next candle was less of this body or more of a green body next to it, because buyers are showing their strength here. Yeah. So now if we're looking at a chart, we start to interpret price altogether and try to determine what that means when we're looking at the chart. Because we don't just, candle means nothing on its own without interpretation and looking at the next candle in front of it and the prior candle behind it. That's what gives us the full story of what's happening. So in this instance, we have this regular candle here with the wick at the top, wick at the bottom. So buyers and sellers fought, but clearly this is a good body size candle, so we like this. And so we have this candle movement or progression showing this, but then we start to have this red candle produce, so we have a little bit of a pullback. If your idea was price was going up, you're always going to have some sort of a pullback. Same thing if price is going down. So we've got price moving up, price pulls down, price moving up, and you've got this strong bullish candle here because it has a little bit of a wick here, full body, and it has a little bit of a longer wick here, but you would probably continue to stay in this bullish sentiment because your green candles are giving really good sizes. Even though they have wicks here, they're giving good sizes. You support this bullish trend until you'd probably see this candle here and decide, okay, I don't know if I'm going to switch. Actually, you'd see this candle here, this red one, kind of like a doji, almost like an indecisive if you don't know, which is fine because if your trend is up, if you're expecting price to go up, this candle wouldn't disturb you as much. This candle would make you think, this is a very long wick at the top. It's a shorter green body. I kind of prepare myself that it's possible we're going to reverse. And then here it says bounce or reversal. And I would interpret that based off of the way this candle looks. Again, I don't focus too much on this, but it is nice to pay attention to that. Where this is kind of nice to understand or to bring candle interpretation back to the way that we use our strategy when we talk about liquidity, break of structure, and fair value gaps, specifically with liquidity. I tried not to talk too much about it in depth because I think it causes a lot of confusion. It's better to do like stream and actually speak one-on-one in person to get better understanding, because there's so many videos out on liquidity, but if you don't see it happening live, it kind of gets confusing. That's why I record as much as I can so I can show you it happening in real time. But essentially, we use candle interpretation to determine also if liquidity is going to happen. So remember, I've explained that liquidity is where you have a key level and you have candles that I've already shown you that they're, their heights. This is their swing high, right? Or if you're looking over here, this is their swing low. This is their peak price if we're talking about highs and lows. What liquidity does is that key level that has been drawn there, because I've mentioned Asia high, London high, Asia low, London low, 4-hour high, 4-hour low. Let's say this was an Asia high. At some point, these candles here were in Asia, and now we're entering into London. And essentially, on this key level, the way liquidity is shown is that a candle will go above and be higher than the most recent high candles that you saw. And in this example, we're using this line as Asia. We're saying these are Asia times or Asia prices. They came up to this highest place. This was the highest they could be. And now it's London. And instead of London to just follow suit, London is magnetized to this key level. It's going to poke its head up and it's going to reverse back down. But this is important. It's not just to see the liquidity and see, oh, price goes up and it makes a higher price than all of these. These were a lot lower. But also to show the size of the candle, because that's important too. I've mentioned before, it's kind of a bonus if you can see. It's not just enough to see a candle come up above a key level and go down. What's nice is when it does it and it has a good displacement, or it has a good volume, or has a big candle that's formed. If it's a little bit short, you could say, okay, I mean, technically it went up. Technically it did a sweep, right? A sweep means it swap out, swope out? It swapped? I don't know. It sweeped, yeah. It sweeped out the most recent high. Like, you guys were the highest at the time, but there's also a key level right here, and you guys were the highest. We took that out. We swept out that high, and we're reversing. Um, it's not enough to just do the sweep. It's important to also visualize this candle and see what is it doing in the process. Is it short? Is it tiny? Is it looking like these? Like, if a candle goes up and it sweeps and it prints out like this, I'm not convinced that this is a true sweep. I'm gonna wait. That's a bonus. You could technically go in and say, look, it's technically sweeped. That word is funny. It's technically swept, yeah. And so therefore I'm ready to go. But more interpretation, more experience, just understanding, again, using all your tools and understanding the candlestick formation, I would also look for a nice large candle. I want to know for sure we're going down. I want to be confident. When you're using demo money, sometimes you forget that you need to treat demo money like real money. And if it's real money, you're not just going to throw real money at a possibility. That's gambling. We're not gambling. We have a strategy and a plan on how we're entering into a trade. If this candle goes above and sweeps out these most recent highs, right? Cool. I like that. That makes me happy. And it's happening at the right time. Fantastic. But if the candle does not reflect how important this is, that it's taken out the most recent highs, then it calls to question if this is even a real form of liquidity. Same thing on this side. You have, let's just say it's pre-market. This is 8:30 and prices are coming down, and maybe this is a London low. So pre-market comes, and pre-market doesn't even take out this London low, this yellow line at all. And now it's 9:30 on the dot, and the candle comes all the way down, sweeps out these pre-market lows, and essentially a London low, because even though I'm calling this pre-market, if this line is a London low, this tells me that this is the lowest that London got during its session between 2 to, let's say, 7 a.m. or 2 to 8 a.m., whatever. And now it's 9:30, and boom, candle comes down, sweeps out everything that was low in London, and it comes back up. This makes you happy. One, it's happening at 9:30, which is the time that we're looking at. Two, it's come down and taken out this key level, which is important. That's how liquidity takes place. It's reversed. And three, which people we don't pay attention to, but because of this we're paying attention to, the size of the candle tells me, oh yeah, we're going up. No question about it. Because even this long wick here lets me know that price had fully been down here. But the buyers pushing up, that's what it does, push this candle up. And if you notice, this wick is long, but the wick up here is short. Long wick at the bottom says red was there, but green pushed the body up. And then your next candle starts to reflect just that the buyers that are pushing up are strong. In this image, the candle goes up above this Asia key level, and sellers push down. So this line is really long, this wick is really long, because price must have been more green up here, because this is up is bullish, bullish is up, buyers are up, buyers push up, sellers push down. So if sellers are pushing down, you're going to just have this wick that shows you where price had been before, because remember, wicks are like fingerprints. Price used to be here, but it's down here. That means the sellers are in control. Sellers are pushing this price down. They didn't want to see it up here. They pushed it down. Buyers did not want to see it down here. They pushed it up and they won. They beat the sellers because sellers wants it down 24/7. Buyers want it up 24/7. And the color tells you finally what happened. But realistically, you can't just look to see what happened now. You need to see what had happened to determine. Like, yes, this is green. Cool. But a more like, if you think a little bit more deeper, This was red at some point. It then became green, okay? And if it became green, it has this long wick. Red had been down here, now it's green, and it has a short wick up here. The buyers dominated. If buyers dominated at this key level, buyers are going to keep dominating for a while, if that makes sense. It's giving, like, we have to add everything together. Same thing here. It's good to say that yes, this is a red candle, but what you have to believe is that it was green at some point. Buyers and sellers are like bulls. They're fighting each other. They're constantly in this, I want price to go up, I want price to go down. I've never sold anything in a marketplace, but whenever you go to the market, it's the same concept. There's a buyer and seller, customer and, a person who's selling whatever they're selling. There's a constant tug of war. You're selling this material for $30. I want to buy it for 20, right? That's me as a buyer. I want to buy it for less than I can go sell it somewhere else. The person who's selling me wants to sell it for higher because they want to make a profit and how they bought it initially. There's constantly this tug of war between them, and that's what the candles show you. When you see it like this, it's already printed. When you see it live, and it's currently 4:32 on a Sunday p.m., so you're not going to be able to see it live because the market is not open. But you can see the printing of it going back and forth. When you see the candles going back and forth, it's buyers and sellers like fighting. Who is going to make this deal? And when you see the candle print, you go, okay, well, looks like the sellers won. Oh, okay, well, looks like the buyers won. And for us who are trading, we have to interpret what that means for us to determine if we're going to enter into this trade. The candle size here gives me the confidence to look for more information to determine if I'm going to enter into this trade. That's great. So yeah, okay. I think I spent too much time on that. We've talked about fair value gap and in another video, so I won't address it on here. So it's not confusing. I want to address that here. Okay, cool. So let's go to the actual chart. And I'm going to drop down to the 4-hour. On these charts, each candle represents a length of time, and you determine what length of time you want it to be set. I set it to the 4-hour, which means each candle prints in 4-hour. Now I'm not going to be able to do this live because the market is not open, but I will do a replay to see if you can see what price looks like when it prints, kind of, sort of. Let's pick up the speed, I guess. Well, that's just printing out the candles. It doesn't really show you the candle itself, like printing out. Either way, let's leave it out. Okay, so these are candles. This is how we'll interpret the price. So if I'm looking at this candle here, let's start here. Let's say this is where price is right now, and I don't know what's going to happen, but I'm just interpreting. I'm like, okay, I see that there were black candles here, and there's a gap over here, but there are black candles here, and then we have these green candles form, and then black and then green. So here, do I know what candle is going to print out? No, I don't, but I want to interpret what the candles are saying to me. What I'm noticing is that this is a black candle. It's a nice full candle, but I see that there's this wick down here, which means price dominated here, but ultimately this price ended up in a black. So price opened up here, went up, made a little high, came down, but buyers pushed price over here, and this is where it closed. Then we opened up here, and I know that because it's a green candle, but I know that it went back and forth. At some point it was up here, this wick, but sellers pushed it down, and ultimately it closed here. So then I look at this candle, it closed here, this candle opened here because it's black. I know that black candles open at the top, close at the bottom. So they went back and forth. At some point, looking at this wick, this was green, but sellers pushed it down because it's no longer green, obviously ended black. But price had been a lot higher. Sellers pushed it down. It even had a little bit of a bump here. Buyers pushed it up. But if I compare the top wick and the bottom wick, this is obviously longer. So now I'm kind of like, okay, let me interpret. It could mean that sellers are trying to dominate here. I could see sellers printing out more. But at the same time, we just have to wait. Now, I'm not entering into any strategy. I'm just looking at price and interpreting what the candles could mean. Okay. So just based on this, we said, okay, the candle showed this long wick at the top, showing that buyers' price must have been a lot higher. But the sellers came and pushed it down and left this evidence that price had been up there, which is this wick. So if that's the case, then I wouldn't be surprised if the next price shows that sellers are still in control, which it does, meaning that it still opens up as gray and it's a full body, but it's a little bit shorter, obviously, and you've got this wick down here and wick up here. Also, if you look at the time, it's 2 o'clock p.m. You may not be getting great volumes either, so that's another thing to interpret. And then you have a green candle, another green candle. So maybe here the wicks are kind of becoming more equal at the top and at the bottom, though it's a really good size gray or blackish candle for sellers. But your next candle is green and your next candle is green. It's not a green like this, which could still show you that sellers are in the market, because even though it's green, if if you think about it, it's green, but it's a very short, like a doji sort of candle where it's not giving you a clear decision. There's an equal wick at the top and the bottom, meaning the buyers and sellers fought pretty heavily here. Even though we opened at the bottom and closed at the top to show that this is a green candle, sellers were pretty dominant in this candle as well. And they were pretty dominant in this candle too, because it looks like, though it opened up at the bottom, this candle here, it closed at the top with this wick here. Sellers obviously pushed it down. They weren't able to push it down far enough because there's no wick at the bottom at all. There's no evidence that the price even got any lower. So this could be interpretation that price is made trying to reverse and show us more upswing up here. So let's play and see. Okay. So we have this candle saying, okay, we might be showing us that price may want to be more bullish because there's no wick at the bottom to show it went down. Then we go to this candle and it says that candle prints out this way and it has this long wick, another wick here. Still almost like an indecisive candle, like a doji similar to this, because the wicks are kind of equal, it's hard to tell. And then we go to this big candle, which is a big green one, similar to this. Clearly buyers are in this candle. Price had previously been down here, but buyers were able to push it up and have this little wick, so they're pretty strong. And then you've got this candle to the right of it. It's almost like an indecisive, maybe a graveyard candle, where it's a long wick at the top, long wick at the bottom. The sellers won because it ends in their color, but in interpretation, it still looks like buyers are winning here because the buyers pushed it up. Sellers still won and closed it, but it doesn't give, this is not a strong black candle to let you know that we're going price, but we still keep playing it out. This is how we interpret price based on how the candles look. So when I see this candle here, I'm like, yeah, it's not clear. I would say that bullish is going to be evident here, because if black candle wanted to be dominated, it would have been a lot longer. The fact that this is this long wick, and that lets me know this candle had been down a lot lower, but the bullish or the buyers were able to push this candle and push it pretty far. But you can make the same argument that, well, sellers came in and pushed this pretty down as well. But my understanding whenever I see this candle is like, this is an indecisive candle, and I had said earlier that whenever you see any whatever candle is here and you see this sort of indecisive, if it's this color, I'm expecting a green, either 1, 2, or 3 candles next, because even though this closes black, this is a weak black. This is a strong green, and that's what happens here. Then we just kind of print out and see. Every candle means something, but it's really more of how you see it as a team. Let me take this out and see, like, let me say we're going to enter into a trade, and we're scalpers, and we want to enter into a trade to see. I'm not cherry picking anything in particular. I just want to, let me see what time. Let's see if it's 9:30 and I want to enter into a trade. I'm going to drop down to the 5-minute. Yeah, let's enter into a, doesn't matter. Let's say it's 9:30 right here. Okay, let's say I want to enter into this trade and I'm waiting for market to open. Let's drop down to the 1 minute. And let's say I'm a scalper because like I said, candle candle interpretation works better for those who are they work more precise for those who are scalpers because that's what they focus on the most is the actual interpretation of the candle. That'll help them decide if they should get in, when they should get in, if they should get out, when they should get out. So let me see. And I'm not really looking at what price did afterwards. I'm just looking at this as a scalper to determine. So let me see. I'm doing two things at once on the other side. Okay. Let's see. I'm ready to take this trade. So in my mind, I'm already, let's say because again, I have not paid attention to what's going to happen. We're in replay mode. We're acting this out. But just picturing, if I'm a scalper, I see that there were these long, big black candles here. And then black candles dominated over here. Okay. So I'm looking at things like that. And I see overall, looks like on the 1 minute, we've been steadily going down. Okay. But I'm going to pay attention to this gap because I know two things about price. Price is magnetized to itself, or a few things. Price is magnetized to a gap, so it loves a gap. And this is a nice peak level too, where price came up somewhere. If you think about it, came up over here because this was a high point, but price went up and reversed. That's like a sign of liquidity, but this is happening at an 8:30 time. This is not a time we'd pay attention to. So I'd pay attention to this because if this is liquidity, true, then price has a tendency to want to come up here at some point. Again, there's a gap here. So I'd pay attention to that. This is a relatively equal highs somewhat. If I draw that there, somewhat relative to these two, price might be attracted. Price is attracted to gaps. It's attracted to itself. It's attracted to itself in gaps. It's attracted to draws on liquidity. But I'm also paying attention to the size of these candles. Wow, these are large candles, Even though we have some green candles kind of settling up here, I'm not seeing a whole lot of big candles because overall price has been bearish, right? That's what price has been looking like in the overall market. So, okay, let's see what price gives us. Let me zoom. Okay, this is going too fast. Let me drop it down. And let me select a bar. We said 829. That's fine. So I'm going to zoom in so we can see everything. Okay, so now price prints this candle. Okay, I'm not entering on that. Okay, I want to enter in on this, but the wick is so long here, and again, price was going downward. I want to pay attention to this. This is not a good price for me to enter into. We're 932. Okay, but I see prices going up. I have a shorter wick down here. I've got a long one. Okay, now I enter in on this candle. If I set my long position, I'm entering, and unfortunately in a replay mode you can't print this out, but I'm entering in on this candle and I'm putting my swing underneath maybe this low or whatever. And I'm telling myself, I'm gonna put this aside, I'm telling myself I'm gonna get out of this trade if my price comes somewhere down here, but I'm also gonna trail my stops and get out sooner. Actually, let me use this. I'll put my stop loss down here. I'm not setting a take profit because I'm scalping, so I don't know where price is gonna go. So let me just keep playing. Okay, this is cool. Depending on how much money you've put in, you've made $1,200 just with this move. Okay. Now, I'm not ready to remove out of this trade because, one, it's not gone any lower. Also, this is like an indecisive doji candle kind of look. So we could keep going up. This is such a large green candle, large enough green candle over here that I feel confident to stay in this trade for now as a scalper. Oh, yeah. I'm glad I stayed in that trade, right? Because three things just happened. This doji candle right here told me that the next candle might likely be big and might be green. Not sure how big it would have been, but would be green, and it's green. This gap that I noticed, that I told myself price loves to be attracted to gaps. It was attracted to that, and I just noticed that this level here where price took out a previous high and reversed back down let me know that it's possible that price might want to come up here. Now, question to yourself, now that you don't normally have time to think this through, okay? There is another gap up here. This is just like logical. There is another gap up here, but before you get to this gap up here, and I'm just drawing it not in a proper way, just to say, look, there's just this space up here that I noticed that price could come up to. I also noticed that there is another relatively equal high, and I said price is attracted to relatively equal highs, right? Because there is a relatively equal high right here that I had drawn initially, and price obviously soared through that. So there are a couple things happening. There's a relatively equal high, there's a gap here, there's kind of like a tiny gap right here. There's this kind of liquidity over here. I've said before, key levels like liquidity are places where price also has an opportunity to reverse from. So sometimes, depending if you're a scalper, you might stay, take your chance, move your stop loss closer, maybe above that doji, because anything underneath that, you're like, I'm not willing to lose. In this instance, moving my stop loss above where I started, because I entered into this trade down here, but I moved my stop loss up here, will keep me in profit. I'll still make money regardless of what happens. But right now, I'm positive 2,800. If I say press play, let's keep going, and price comes underneath this yellow line, then I'm positive $1,000.30. Obviously less than what I was when price was up here. Then you start to think a little bit high level or with some experience here, and you say, okay, I've hit a key level. I've hit an area where there was liquidity. I've taken out this gap, and I've surpassed this relatively equal high at a time that it is 9:30. I don't know. Can't see the time here, but I know we started at 9:30. It's probably like not more than 9:33, 9:34. We're 4 minutes into market opening. I could just take my 2K and bounce. I should be okay. What a lot of scalpers would do is say, if price drops halfway, let me move this. If price drops halfway between this last green candle, and I'm eyeballing halfway, I'm probably not even doing this properly, then I have a reason to get out of this trade. So you could ultimately get out of this trade just based off of these key levels that were drawn. But if we're just focusing on the candle strength, this candle can give you the opportunity to continue to stay in this trade. It's a really long green candle. You've had previous candles that are long. Even this indecisive candle is indecisive only to tell you that the next candle would likely be green. The only thing about this candle is that it did not close above this key level, so you're hesitant to move forward, so you'd be cautious. But just for demonstration purposes, I'm going to draw this back down here and leave it here, and let's say what price wants to do. As a scalper, great. You stayed in this trade, you made the right move, price is moving up. It's got this big green candle. Now, is this candle as big as this one? No. So you start to think, price might want to start reversing back down. Why? Because this is a huge green candle. Now this one is a little bit shorter. We have good buying momentum and good volume on this, but I also noticed that this wick up here is a bit long. It might be the same as this one at the bottom, but I'm looking at the wick from this previous candle. The wick from this candle is pretty short up here, but on this other one is longer. So is it possible price wants to start reversing and going down? Let's see. Press another play. Okay, I've got this candle, which means, and again, I can't play it live with time, but clearly price came up here, right? If price came up here at some point, that's great, because price came up and acknowledged this relatively equal high up here. That would have been great. Price took that out, and now it's reversing. And you can see we have good size green candle, good size green candle, good size green candle, okay size candle here. We have an okay size candle here, and we've got this wick up, so I'm thinking price may want to change. And here we go. The next candle is black, long wick at the top, which means sellers are pushing down. to this candle and price wants to reverse. Now, a smart person would get out of this trade. A smart person would get out of this trade. Um, but for, and I'm not saying an unsmart person would stay. Somebody with a lot of experience or who's willing to take a little bit high risk or doesn't mind losing might say, nah, let me stay. Why? Because I still feel like there's a gap up here. I think price really wants to come up here. Also, I noticed that this candle, though it's black, it actually crossed this purple line and went up. So if it went up, then I'm expecting the price might want to keep going up. It just had to reverse back. Because remember, in candle interpretation, candles always reverse to the middle, at least 50% if we can, and it goes back down. It's going to come up a little bit, like take a break, but keep going back down in the direction. Come up a little bit, take a break, come up a little bit, take a break. In this sense, we're saying, yeah, price is going up. It took a little break over here and kept going up. Now it's taking a little break over here. So let's see what it wants to do. Okay, we have another black candle. Okay, that's fine. But listen, the candle is small. The body is small. The wick is long, but the body is small. Almost similar to this. It's possible that price may reverse and go back up. Let's see. Okay. It hasn't done it yet, but listen, it's still a small body, and this is a long wick at the bottom. That means buyers have been pushing. So it's possible we're going to go up. This is the mind and the thinking of somebody who's scalping, who scalps and trades specifically candles, who interprets candles and says, I'm using the way the candles are forming, or I'm using the way the candles have formed to determine how I'm going to set my trade, how I'm going to make money. And I've said before in a trade that, like, if you enter into a trade and it hits a key level or it hits an area that you're expecting price to hit, it's a good idea to take a little bit of money out. Partial profits. Not everybody trades that way. Some people are like, no, if I enter into this trade right here, I'm expecting the trade to hit right there. And once it hits right there, I take all my money. Cool. The problem is price does not always tell you what it's going to do, right? Even if it could tell you, like, hey, I'm gonna hit over here and then I'm gonna reverse. Even if it would tell you that, it's still a smart idea to always take partial profits because we don't control the market. And I feel like I say that all the time, and it's because it's true, and I just want it to ring in all of our ears. We do not control how price moves, when it moves, if it moves, how long it stays in a move. We have no idea when any of that happens. We do not make the billions and the trillions of dollars and move the market. We just enter in, take a little swipe, a little grab of what we can get, and we move on. But the only way to enter into price and take a swipe or take a little something and move on is to understand how price moves and understand where it's likely to go. And when we look at the candle sizes and what the wicks look like and what the body of the candle is, we can safely interpret, knowing that we don't make 100% the move, knowing that price can still go against us. That's the nature of trading. But we can say that based on the sizes of these candles, I'm confident that price wants to go up. And based on the size of this candle, we entered into the trade because this candle gave us a good understanding that, listen, price is going up, and we have areas where we know price wants to go to. So price has this big, voluminous look, and it's big. I'm willing to enter into this trade. It hits a key level here. It even surpasses it, still with a nice, large green body. I'm okay with that. It gives me this indecisive candle. This does not mean that we're going to go down. This means price doesn't know what it wants to do. But my understanding too is that if price shows me something like this, typically the next 1, 2, or 3 candles is going to be the opposite color of what it closed as. And it closed as black here. So I'm expecting the next 1 or 2 or 3, whichever candle comes after this, would be green. And sure enough, the next candle is not only green, it's large. And it's got a wick here. That's fine. It's got a tiny wick up here, which means that price must have been lower, but price pushed up and made this huge volume where sellers couldn't even touch it. And sellers came up here, and obviously they pushed price a little bit down, but their power up here compared to buyers' power down here, the buyers are clearly in control in this entire move, and it continues to reflect. And then we look into this next candle, which is also nice. It has a good volume. Is it as voluminous as this? No. but it does cross over a key level of ours and it stays up there. Now we're in what appears to be possibly a drawdown versus a reversal. We don't know if price wants to start coming down or if it's just in drawdown to reverse back up. That's why this is scalping, because you could get out of this trade. You could have gotten out of this trade when the candle crossed over here, entered back in, or you could have taken out partial. Like if we entered in, we only entered in with 2 contracts. If we entered in with like 10 contracts or 5 contracts, we would have taken partials out and waited to see what price wanted to do, and maybe we would have added more money when we saw this candle was printing and printing and print. Okay, let me add more money because I think it's going to come up here. Scalping is just in and out movement, really short movements. And when price would have moved up here, we could have said, okay, let me take out most of my money and let me just see. But right now we're waiting to see if price is going to end up coming up to this gap, because we have areas where we want price, we expect price to go based off of how the market is structured. So let's see. Okay, we've got a green candle. So price looks like it was really just in a retracement. It's reversed, or not really reversed, but it pulled down or had this drawdown or this little reversal where it comes down a little bit, and maybe it looks like it's going up a little bit. Little candle down here, so buyers were able to push it. A bigger candle up here, sellers pushed this down a little bit, but ultimately this has closed as green. So let's keep going. Tiny green candle. Ooh, large green candle. What time is this? 9:42. So we entered into this trade at 9:32. This is 9:42, and you can see there's a gap right here that price was ultimately likely trying to go to, and it got as high as up here. And I didn't mark this, but these are some relatively equal highs up there. Okay, so you can keep following this, like, okay, this is a big green candle, I might want to continue into this trade. Right now I'm positive $6,000. Let me continue to go. Okay, this is a big full black candle right now. Small wick at the top, but full black candle, no wick at the bottom. So I'm watching that because it's the full body. We might start to reverse back from that. Okay, another green candle. Small green candle, almost indecisive. Candle crosses over. Big black candle comes all the way down from this key level here. And if I was moving my stop loss up and up, and I said for a big green candle like this, I would move my stop loss to halfway right there if I really wanted to keep staying in the trade. Then if this candle, if any candle crossed over halfway line of this really large candle, that would be my exit. I'm out completely. Okay, I'm getting close. And it crossed over. And part of the reason why I felt it would was because this is a very large black candle here. Very little wick, full body, like a nice full body candle. And this is a key level. This purple line is a key level. And I've said before, key levels have a tendency for price to reverse back down. So once you had that green candle hit over here, you'd start preparing yourself for price to reverse. You take your partials. You would either get out completely or you take a partial and see what price wants to do, and clearly price reverse back down. So this is just price interpretation, candle interpretation. It's a nice tool to have in your belt when you're trading. Now you're like, how do I add key level plus liquidity plus break of structure plus candle interpretation plus time plus fair value gap? And there's another confluence I'm hesitant to teach because I don't want to add more stuff. It gets a little confusing, but it's like, how do I add all these things into my toolbox? The only way to feel comfortable adding all these things is to just practice it over and over again. Enter into the market, into the charts when the market is open. Feel free to practice. Feel free to enter into a trade. Look at the candles. Watch other people who are entering into trades. That's the only way. And then you have to start doing it yourself. The only way to understand or feel comfortable is when you're actually doing these yourself. Nobody ever believes that until I say it or someone else says it, and they're like, okay, you have to practice. And that's what's great about TradingView, is that it's foolproof. You don't have to worry about actually losing money. You don't have to worry about putting in your credit card or anything to that extent. You just practice looking at the charts, especially when the market is live and open, which it'll be in the next hour or so. So yeah, that was candle interpretation. I I genuinely hope that that wasn't confusing, and I hope that it clarified and made some sense. I'm going to send you all the video along with the PowerPoint. But ultimately, the best way to understand this is to get into the chart and practice it.